It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, August 10th, 2015. Cracking open the month of August. We're only a few weeks away from Labor Day. That means the best price action, the best opportunities are right around the corner. Guys, you do not want to be flat-footed going into this fall. Take the time to learn this stuff before we go into the end of this month here, because once we hit September, watch out. We go into 4 or 5 months of very, very good trading opportunities. So don't go sleeping away this summer. Back from vacation. I always miss you guys when I go away, but part of my trading plan. Got to take a few weeks every year, rest, refocus, right? Heal all those bumps and bruises, spend some time with the people that you're working hard for, and give yourself a chance to kind of regroup here as we go into the month of August. Welcome back to your nightly newsletter. Feels great to be back. Thanks for watching the markets while I was gone. We get a jam-packed newsletter in store for you guys, and I'm going to be with you until the end of 2015. I'm not going anywhere here. The only other time we're going to be off will be Labor Day weekend, that first Monday of September. And then, mark my words, guys, after Labor Day, we go into the best time of the year by a long shot. I tell everybody every day, do not sleep your way through the summertime because you want to use this time to get ready for the fall. That means learn these strategies, practice with us every day in the trade room. You know the drill. We'll talk more about that. Before we jump into our newsletter, though, got a lot to cover here. Got some ranges to work with, some trends to work with. Before we jump into our charts, though, I do want to remind you, everything I'm going to talk about tonight we cover in our beginner, intermediate, and advanced membership courses at School of Trade. Check out schooloftrade.com. Get a great free trial. I'll talk about that at the end of the video tonight. Also, want to remind you to make sure you're watching this video on our trading blog here at Sideways Markets. There are a few reasons why you should be watching this video on our trading blog. First of all, you can grab that free trial membership to schooloftrade.com right on the right-hand side there. I also have someone standing by here 24/7 to give you guys any information that you may need. Also, you can grab a free pass, come out and join us in our live trade room, upper left-hand corner. And then if you scroll down here, you'll notice we have a nightly newsletter mailing list as well as a link to be able to download all of today's charts. Here's what I want you guys to do. Grab your free pass in the upper left-hand corner. Did I mention I was away on break last week? Grab your free pass, upper left-hand corner. Register for our mailing list in the lower left-hand corner. I'll send you an email every time the newsletter goes live. That way you never have to worry about missing another newsletter again. And then all the charts I'm going to be using tonight, you can download all the charts by following that link right below tonight's video. And again, don't forget, I've always got someone standing by here 24/7, 365 to answer any questions that you may have about this. So don't be afraid to hook up with us here online and ask for help if you need it. Download those charts, grab your free pass, and register for the nightly newsletter mailing list. And remember, if you grab your free pass or you register for the mailing list, I'm going to send you a verification email to make sure we've got the right email address. So make sure you check your inbox to verify your email. Shall we get started? Welcome back. Boy, it feels good to be back here. Had a fantastic day, first day back. A lot of good volatility. Where's it all coming from? Well, as you can see here right now, we start with the S&P 500. S&P, the E-mini S&P. We're trading sideways inside a price wedge, which means we'll be looking for buyer failures to sell the highs. And then, of course, all the way down to the bottom, we'll be looking for seller failures to buy the lows. One of my favorite ways to trade, and we're seeing that right now on the S&P. There really isn't much of a directional bias, not for day traders. If you were a swing trader, you look at the last year and a half, sure, there's a big, long, bull trend. But, guys, I'm not a swing trader here, at least not on this newsletter. We're day traders, so we're looking at short-term opportunities. That means as the price goes up to the highs, I'm looking for buyers to try and fail. I'll sell it back down to those lows. We go down to those lows. I'm looking for sellers to try and fail, and I'll buy it right back up. There really are three main components that you want to be aware of when you look at a price wedge. One, stay the heck out of the middle. Mama said, don't fiddle with the middle. Stay away from the middle. The middle of this price wedge is going to be the sloppiest part to trade, so stay away from the middle. The second piece of this is I'm going to sell the highs Third thing, buy the lows, right? So 3 pieces you want to be aware of when it comes to a price wedge. Stay away from the middle, buy those lows, and sell those highs. Now, members of mine, okay, if you're not a member of mine, you may not be aware of this, but the easiest money, where's the easiest money going to be? Yeah, see, this is a little bit of a tricky one. The easiest money right now will be made waiting for the buyers to try and fail, selling right into those stop losses. Or go down to the opposite side, wait for the sellers to try and fail, then you know where their stops will be, right? It's where you would place your stop, and then you can buy right into those stop losses. So in my trade room, we always say, wait for the failures. Don't just blindly buy the lows and sell the highs. Now we go back to the chart. As you can see, we've got plenty of resistance areas overhead, right? We got this cluster of swing highs up here. Lots of easy areas of resistance overhead. What am I looking for? Buyers try and fail. If you're a member of mine, you should know exactly what I'm talking about. We teach it all in our intermediate course. What if we go off those highs, take your profit down at the lows? What am I doing in the lows? Again, I don't want to blindly just buy it. It's better, it's much higher percentage. You get a little more juice on the reversal when you wait for price to try to go lower, and then once you see it fail, right? We don't like to guess. We like to wait for the sellers to try to sell those lows and buy it back in. Wait for the buyers to try to buy those highs, and sell it back in, right? One last thing, don't forget, stay away from the middle of that price wedge. I'm looking for buyer failure at the highs. I'm looking for seller failure at the lows. And don't fiddle with the middle. Hold on to that runner up to the high, down to the low, right? Use that price wedge as your guide. Down to those lows, up to those highs. Down to those lows, up to those highs. Now, one last thing. Probably not going to be tomorrow, but later on this week, we're going to start dealing with kind of the pinpoint, right, the narrowest portion of this price wedge. When we get to the narrowest portion, that's when you're typically going to see the big, it almost feels like a jack in the box, right? Bam, and then it goes, of course, and breaks out. We're not quite there yet, but don't get confused by this run higher today. We go right up to the highs of that range. The higher we go, the more lucrative the selling opportunity. The lower we go, the more lucrative the buying opportunity. Don't let the breakout fool you. We'll be trading this market tomorrow in real time, live in our trade room. Come out and join me on the S&P. I know. We got to talk about crude, right? We got to talk about crude. Now, if you recall, it's been a few weeks since we've seen our good friends here on the daily chart. I told you, daily charts are kind of useless for day traders, right? If you're a position trader, swing trader, taking a few trades a week, a few trades a month, okay, you can go looking at daily charts. One of the biggest time wastes I see for a new trader, and really it just confuses you, is daily charts really have no use for a day trader. We can do better than that. We're looking at much too slow of a time frame. So like I said the last time, I don't break these daily charts out very often because I don't want you to think they're very useful. But if you're wondering, so is this a bottom in crude? How far could we keep going? I told you the same thing. I'm going to tell you it again right now. 42.85. This is the exact same thing I talked about a few weeks ago before I went on vacation. Now we come back, and it's very easy to see not much has changed. Bearish trend going down into a trading range. We break out of that trading range. Buyers try once, buyers try twice. They fail, and now we go back into that range. I've got an A, B, C, D. But bottom line, though, is when we slip and fall back into that trading range, it's natural. They're going to try to run down to that low. Whatever you do, though, be aware there is going to be a ton of bear traps down here. And it's going to be so convincing. It's going to feel like this thing could never stop going lower. But don't you trust that breakout to the downside. What you want to be looking for is that 42.85 and then stop selling. Be patient. I can't quite say I recommend buying that low, right? But I definitely will expect to see some traps down there. That's all we're going to need to know about this daily chart right now. Again, if you're a day trader, you're making your money intraday, Guys, this is way too slow of a time frame, but because I've had a lot of questions in the email inbox over the past few days, is this a bottom on crude? I don't think we're quite there yet. 42.85 will be the next milestone. But again, as a day trader, none of this is really, it's somewhat relevant, but we can do better. We can do much more precise as far as our entries and our stops and targets on a faster time frame, right? So resist the temptation to get wrapped up in all the daily charts, right? You see it all over the internet. People using long-term time frames to day trade. Yeah, little bit, it doesn't make a lot of sense. Zoom in faster now. Now let's go to a time frame that gives us a lot more detail. It's just a simply faster time frame. You don't need the daily charts. Now let's get into our crude. Now, we're trading the 9:15 contract on crude. I know it's been a week or so since last time we saw each other. Crude will roll over on the 18th of this month, so we still got a week and a half left until we're going to worry about rollover on crude. Trading the 9:15 contract. Unless you've been living under a rock lately, and I wish these prices were reflected here in Los Angeles. We're still paying $4 a gallon here, summertime pricing here in La La Land. But for the rest of the world, though, I filled up my gas tank in New England last week, and it was $2.35 a barrel or a gallon. So I wish we had some of those prices here in Los Angeles. But hey, I walk to work right down the hallway every day, so I can't complain too much. So crude oil, bearish with a capital B. I feel like I've been saying this every single newsletter since, last summer, right? I mean, it really has been. Every time this market goes up, we wait for buyers to fail and sell it back down. And this is a very good example you see in the upper left-hand corner here on this crude chart. Every time this price slips back above that moving average, we're just waiting for, again, buyers try once, buyers try twice, sell right into those stop losses. Guys, this is a classic scenario on a trending environment we're seeing here on crude. There's a lot of great trends right now. Euro's got a good trend. We got the gold, a good trend. Really, the S&P is really the only one that's kind of flatlined right now, which means you can buy and sell that one on both sides of it. But we're looking at a strong trend on crude. Write this down. The easiest money is going to be made when the buyers get this above that moving average and when they fail. If you want to know the precise entry triggers, come out and join me as a student here at School of Trade, and I'll teach you all of it. We trade it every day. But the reality is, in a strong trending environment, the easiest money, okay, I know we'll sell retracements, but I'm talking about the easiest money. Right? The gimme money, just a bag of cash sitting in the corner, go walk over and pick it up. Every time this market goes and tries to get a little bit bullish on us, just wait for those buyers to fail and sell right into those stop losses. This is a carbon copy of what we've been saying on crude pretty much since last summer, right? When we started that descent off of 110, right, all the way down to, well, right about where we are right now. Crude oil bearish. Now here we are. We're in the middle of this bear channel, which means we still have room for this price to go higher. Okay? But don't go drinking the bull Kool-Aid if this thing pushes higher tomorrow. Okay? Get a nice big, it definitely felt perky today, didn't it? We definitely had opportunities here to see those bulls kind of flexing their buying muscles today. As you can see, though, ever since I left town or left my desk, right, we've been nothing but selling off here, right, ever since the end of July into this second week now of August. So are we due for a correction? I don't really think that way, right? A lot of folks will say, well, it's gone lower for 3 days. It can't keep going lower. Oh, yes, it can, right? Spoken like a gambler. I flipped the coin 5 times. It's been heads every time. Surely it can't keep going heads. Oh, yes, it can, right? Remember, these markets, what's the old saying? They can be irrational longer than you can be solvent, right? So don't play the whole gambler's fallacy. It can't keep going forever because, oh, yes, it can in terms of running you out of money before it then decides to go higher. So we're going to trade the chart. I don't care how long it's been going lower. All I know right now is strong bearish trend. How are we going to trade a strong bearish trend? The easiest money is going to come with buyer failure at any of these resistance areas overhead. You could also look for reversal patterns at any of these resistance areas overhead. Or, if you want to be super conservative, wait for the price to get up, then begin to make its move lower, and then sell those retracements on the way back down to targets we have waiting for us below. Crude's relatively easy right now. The hard part is going to be patience, grasshopper, patience, right? Wait for this thing to get up off these lows. And I know I've been saying this all year. Wait for the buyers to get excited about it. Stay patient from the fail. It's going to get you into a great spot up near the highs to sell it right back down. Remember the rotation of these channels, right? Channel down, rotation, 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 right? Low to high, high to low, low to high, high to low. Well, right now we are coming off those lows and we're trying to rotate up to those highs. Just when you start thinking this market it can't keep going low forever, just when you start buying into the idea, all the fear mongering on YouTube we see, right? It's going to make a big run. Just when you start buying into that, that's when this thing's going to come right back down. Follow the plan, right? Follow the plan, not the news headlines. We'll be trading this tomorrow morning, live in real time in our trade room. You don't have to go at this stuff alone. Keep in touch with us if you have any questions. Now that we know what our plan is, buying lows, selling highs in the E-mini, selling highs on the crude, now we're going to see a lot of the same stuff here. Trending markets, trading up near the highs of the channel. This is go time right here. On gold, gold is bearish. Now keep in mind, we are trading the 12-15 contract on gold. Remember, gold has that funny business where it skips the 10-month every once in a while. You can find more information inside of our beginner's course on why it does that, or go right to the CME group and go to the metals section, and you can get it right from the horse's mouth. So we know that gold, we skipped the 10-15 contract. I'll teach it all to you guys as a beginner member at School of Trade. But here we are trading the 12-15, and we are all the way up at the highs of this range. This is another market. We've been saying this all year. Every time it goes up, wait for the buyers to try and bring it right back down, right, when they fail. Nothing different here on gold. Right now on gold, your best bet, wait for those buyers, try one more time, and then sell right into that failure. Even better would be if it goes up and hits that 11.4 area, that measured move resistance. So gold is bearish, trading at the highs of a bear channel, which means, sellers will be looking for buyers to fail at the highs for the best selling opportunities back down to these lows. Targets waiting for you down bottom. Measured move support, extension support, those are your targets. Okay, I would say also targets, the green lines, the yellow lines, right? They're major swings, they're buy zones, and they're also going to be, of course, measured move and extension support. How high could we go? Well, we can go as high as this market wants to go. The higher it goes, the better for selling opportunities. Again, don't let a little push higher right now fool you into thinking this is a bullish market. AB, CD, another measured move resistance area overhead. That puts us in a beautiful spot to be a seller. The easiest money you're going to make on gold right now is to watch those buyers try to buy right into resistance and then smack them right back down, selling right into those stop losses. If you don't get the failure, if we just roll over and play dead, then you're selling those rips, wave pattern short, continuation pattern short, and buyer failures on the way down, and you've got easy targets waiting for you as we go lower. Gold has a bearish trend right now, up near the highs of the range. Buyer failures are the best money you're going to make, the easiest money you're going to make. And then, of course, reversal patterns of these highs. Don't forget reversal patterns. You'll learn those in the intermediate course. And then, as always, if you don't grab the reversal or the failure, the final step is wave pattern short, continuation patterns as we come back down. Just again, don't forget, you've got those support levels waiting for you below. Don't be a hero and sell into support. Sell up off support that we get enough room to build in some profit. Don't sell into those green boxes. Okay, make sure you sell at the red areas, or at least give yourself enough room away from those green boxes. Again, be watching this market live in real time tomorrow. You're not to do it on your own. Let's wrap it up here now with the Euro futures, the 60. We're still trading the 9.15 contract here on the Euro. Here's another market, same thing. Very, very similar to gold, a little bit stronger here in that trend. You can kind of see the channel has a little bit steeper slope to it right now. But again, I mean, crude, gold, and euro all have pretty much the same plan of attack. Sell, 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 sell. The easiest money is going to come as price goes higher. Buyers fail at resistance, sell off those highs. Reversal patterns, just sell off these highs. If you don't get the reversal or the buyer failure, sell the highs with those wave patterns. You can see we have a nice long-term bear channel, very easy to see there. I did draw in this price wedge. It's important that you understand that will be a target of ours as we go lower, right? You're going to use all these support levels. Don't sell into support, sell at resistance, and use those support levels as profit targets, short-term targets. Get a measured move for a more long-term target. And then how high could we go, right? What if this thing just takes off to the upside? It was a bullish day today. Again, if it goes higher here, wonderful. The higher it goes, the more lucrative this selling opportunity gets. A, B, C, D. Would love to get a crack at this 1176 area, but I'll be looking for it as it goes higher, right? We go up. Don't just blindly sell those highs. Buyer failure, reversal pattern. Members, log into your intermediate course. Learn about them there. We'll do them together tomorrow. If you can't grab the failure, wait for price to reverse and then sell those rips right off that high. The euro will highly be affected by that dollar, and the dollar is being affected by just this little tiny news report we saw last week called non-farm payroll. So we should get some pretty good volatility here tomorrow as well on this euro. As you saw, the S&P, everything was relatively volatile today coming out of last Friday's non-farm payroll. I think it's pretty obvious they're not going to go anywhere near touching rates until the end of the year. I mean, did anybody really think they were going to do that this year? I didn't think so all year. I think I've been telling you guys that ever since the June meeting. Pretty clear here right now, we're not going to see rate lift off until sometime in 2016. It seems obvious. They're not going to mess with this stuff right now while we've got some traction in China, in Europe, and of course, the economy just keeps chugging away here in the U.S. So expect to see some more volatility this week as traders position themselves after the non-farm payroll report came out, and of course, after we keep hearing more of this kicking the can down the road at the Fed. Sell, 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 sell. Selling the highs of gold, selling the highs of the euro, selling the highs on crude oil. And remember, the S&P is neutral, so buy those lows and sell those highs. That'll wrap it up here for me for now, boys and girls. Don't forget, you're not doing this alone with us every day. Come out and join me tomorrow as a brand new student here at School of Trade. We get a great free trial. Head over to schooloftrade.com. Join the free trial. I'll send you all the information you need to learn about the who, what, where, when, and why. We are the #1 trading education community on the interwebs. Guys, you're going to learn more on my free trial than you will anywhere else paying for membership anywhere else. I can guarantee you that. We got 3 levels of membership. That way everyone has a place to begin their career. Even if you're brand new to all this, that's why we have a beginner's course, so you can do this the right way. I focus every day on helping new traders launch their careers. I can't predict the future, but I can definitely tell you where the highest percentage opportunities and how professionals trade this every day. And I look forward to working with you guys and gals tomorrow. I've got someone standing by here 24/7 to give you guys a hand. Keep in touch. My name is Joseph. It's so great to be back. Shall we do it again tomorrow? You guys are stuck with me till the end of the year now. No more breaks for me. We got money to make. Spent all that time and money on lobster. Boy, I'll tell you, the main lobster, I ate my weight in lobster last week, and I am feeling it here today. You know what I'm talking about. I'll see you guys same time, same place tomorrow. Thanks so much for sticking around with me. I'll see you in the morning, 8 a.m. Eastern time. Adios, amigos. Bye for now.